Hey, keen traders, it is Sunday afternoon, Super Bowl Sunday here in the United States. We have the Baltimore Ravens playing the 49ers. It should be a good one. I'm going with the 49ers, but I have my family ties there, so that is the way it goes. Go Niners. And if we want to get a little bit of European soccer, we had Liverpool tie Manchester City today, so that has the Keene household happy all around. All right, let's go and get into what were the pairs we're going to be looking at heading into the week. Well, actually, let's just go to the data we have coming out this weekend. Next week, we have basically our big data flows coming out in Asia and European trading. So I'll probably be doing a lot of, for me, late night, basically getting up at 2, 3 in the morning, trading during the night, because starting on Tuesday, we have the Australian, I think it's the Australian rate decision, and there are rumors of a possible rate decrease with that country, lowering of the interest rates, and that could cause a little bit of volatility in the Aussie USD, and we can see the pair continue to push lower, but of course we don't know that until we get the data. And then on Thursday we have the employment report out of Australia. It might be the other way around. I'll verify that later in the week. And we also have the Chinese data dump that happens, it seems like, on Friday, where they give all the information for the whole where most countries will spread it out over the whole month. They seem to like to do it all in one afternoon. And then on Thursday also we have the Bank of England interest rate decision and asset purchase decision and so forth, and probably the ECB also. All right, so heading into the week, you can see that most of the data is not going to happen in the U.S., so we could have a little volatility before we even open our eyes over here. So let's take a look at starting off with the Euro USD, and we do have to note that with all these pairs is that the majors have broken down in their normal correlations, where normally it was just risk on, risk off over the last few years. And you would see the euro, if the euro was going up, the pound would be going up, and obviously that's not the case. The pound is going down. Or if the New Zealand is going up, the Aussie will be going up, and it's the exact opposite once again in those cases. The only thing that we do have the correlation here is with the yen pairs. If the yen pairs go up, all the JPY crosses are going to probably most likely follow Sweden. We'll go into that shortly. Let's talk about the Euro USD. You can see the Euro USD managed to break higher last week, and it broke above this 134.8250 fib resistance zone that we have spoken about quite a few times. And to be quite honestly, I didn't expect it to break through that level. But now that it has, the next level of resistance is the 0.618, 138.16 level, and that could be the likely target for this move higher. Now, I'm not saying I think it's going to go straight up to that level, and on Monday we could very well have a little consolidation after these drastic moves that happened on Friday, especially if you look at the Euro JPY. If that pair went up on Friday from 123 to 126, so it's up to 300 pips from Thursday afternoon. So that's a move that might need a little bit of digesting. So anyway, so we look at the pair. So what we have is a resistance at 138.16. Support's going to be down basically at 135, or the 50 fib at 134.86, and that's basically all we have to watch. There's no real fib levels or price actions that we can throw in here right now. We have a lot of a hot air right there. What we're going to be looking for heading into Monday is basically just the daily range. We're going to have, if we get a break of Monday's range, which we're going to, what is it at 137.09, so basically 137, we could see a cycle higher, continue up to 138.16. If we break the lows, which we get here at 135.71, then we can see another push down towards the 50 fib at 134.82. So that's really all there is to watch right now. Watch the broader range, 138.16, 135, 134.82, and just look for a break at this inside, and then we can follow the price actions. Let the price action tell us where to go right now at these levels. Next pair we're going to look at is the Great Britain JPY, because this pair continued to move down on Friday rather aggressively. To break below this support and resistance zone, which really hasn't been playing out with much enthusiasm, and we're actually going to change some of that. Let's remove that rectangle, and now the pair is once again has moved lower, and is testing the bottom of the range, which it is low from last week, which came in, let's just say, around 136.75, and the pair is about 20 pips below that. If we get a push back down to open the week up towards this level, we have resistance support here at the 0.382 fib at 156.61, and there we could find some buyers come in. But more likely, let's take a look at the larger term chart and get an idea of what's going on in this pair. The pair moved down with the rumors, of course, of possible rating downgrades. And if the pair does manage to break below this level that we spoke about here at the 156.66, then there's really nothing to stop it all the way down towards the 155 level. I mean, we have a bit of resistance at 155.75. So heading into the new week, I'm gonna create a new zone that I think the pair has a chance, and it's a pretty wide one. So I mean, I don't know if it's gonna be swapping each side of this thing, but I would say the top bottom is around 155 and the top is at 166. And I mean, to be honest with you, at this moment, I don't have any idea which way the pair is going to go. So we're going to just watch the price action. If we get a break below this low and this 0.382 fib, then we very well can continue this move down towards the 155 level, or maybe even further towards the 154. You can see the price action. We have daily price support there. But if we get a hold here, which I think we very well could if the rumors appear to turn out to be unsubstantiated, we could easily make another push back up towards the 159 level, and 159 level followed by 160. So right now that we're sitting about mid-range, I don't have a bias in either direction in this pair. We're just going to let the price action do the talking. We're looking for a break at the bottom of the 3.382 fib, or we're going to look for a break of this range, or basically if we get a break back above this 50 fib, more likely we could continue the move up higher. And just retrace and take out these shorts that we're trying to get in for the quick buck. But you can see the trend is lower, and if you're going to ride this trend line lower, let's see if it actually reversed right at the top there on Friday. It pretty much did. Freight reversed at the top of the trend line, so we have to keep an eye on that. And they seem to really want to aggressively push this pair lower in the short term. Aussie USD, same thing. It continues to move higher. It bounced exactly off the 50 fib this week, and now the pair is consolidating around the 104 level. We're just going to have to watch the price action on this pair once again. We have resistance values basically coming up. I mean, the first level of solid resistance doesn't occur until about the 105 level. 104.60 is what I'm going to be watching in that area. And if we get a break of these lows here at 103.60, then we have support once again right there at 103.50. And if you remember the 1 minute update, we also have a very structured move down where we have basically support levels about every 50 fibs at 103.50, 103, 102.50. So what we're going to have to watch, for the interest rate decision and the employment report, and let the news take us where this pair wants to go, because we're basically a little bit of consolidation here between 104.60 and 103.75, and let the news take us, break us out of these zones, and then hopefully we can get some momentum, especially if it has something to do with the interest rate, to get us out of this consolidation area, and we can ride the tide. The New Zealand now, this is a pair that's in an interesting situation. You can see that the cross has moved up towards the top of its current range, and the wedge that we've spoken about many times before, between 84.70 and the bottom of the wedge, which comes in around 82.60, let's say. So what we're going to watch is you can still see that's quite a big range. I mean, that's a 200 pip range, but we're going to watch this this price action right here, right at the top of the range at 84.70. If we get a hold there, we could get a push right down back to the bottom. So this is a good trade setup for the end of the week now. But if we break above, we can see a push up towards the 85.62 level let's say 85.62 in the short term, and we'll take a look at where that level is coming from. You can see that is the crest from the push higher that happened quite some time ago, actually all the way back in 2011. But that would be the next level of natural resistance. So you can see this wedge right here is playing out, and we're just going to play that into the beginning of the week. This could be one of the first trades that we try to execute. And let's check out the CAD. The CAD is still sitting right here at the that resistance zone that we spoke about. I mean, support zone, excuse me. It's going to be a do or die there. We want to do or die. If we get a hold here, the bottom is the 0.382 at 99.43. The top is at 0.9975, basically. If we get a hold there, we could cycle back and finally get a push up towards that 1.0140 that everybody's been looking for. But until that point, if we get a break here, of course, the next level, the first level of resistance would be the 1.0 level. But if we do break back below this, we can be right back in the cards for another push down to 98.35. So this is the bull bear zone we're going to watch right in the beginning of the week in price action. If we get a hold here, we're going to look for a target up to 101. We get a break, we get a target down to 98.35. Yen keeps going up. It's a one-way train. Don't stand in front of it. Next level of resistance is if we look on a much larger scale. We're going back to a three-year chart here, and it's not even coming in. If you look from the decline from about the 120 all the way down to 75, we're moving right up to the 0.382 fib, which comes at around 0.9, let's say 93.40. There's that level is probably going to cause a little bit of a stir, and we could have investors coming in, at least taking profits at that point. And if we break that, of course, there's 95. So we're going to watch the price action at this 93, and resistance starts at 92. Euro JPY continues to move higher. This pair, many people thought was going to, lose a little steam around the 123 level. Nope, keeps going. So basically, what we're watching, there's a lot of hot air right here. Basically, we watch the 127.90 area as resistance, 123 as support, and basically, we're just going to watch the price action, looking for any. In these pairs right now, any pullback has to be considered a buying opportunity until the trend, which is your friend, continues not to play out for us. Let's just take a look at a few of the pairs that we spoke about last week, and they just continue. We were specifically the Aussie JPY and New Zealand JPY. Both these pairs were at very significant levels, and it looked as though we could definitely have a hold. And you can see the New Zealand JPY, it had been following the fib ranges. It had finally broke above the 50 fib, and it was sitting right at the 7676 fib level on Thursday night. It just continued to break on higher. It looked as though, like in North American trading, it stopped there. And then actually just that night, before I even got up to check things out in European trading, it had already moved up a couple hundred pips or so. So heading into new trading, this 76 level is now support, and the next logical target would just be this price X pre-X level at 82.70. Now, if we move back down towards the 76 could find buyers emerging now. So that's why we're the only reason we're even still keep an eye on that. Aussie JPY, same thing. I mean, if we looked at the daily, go back 3 years, we have from the move down. It was sitting right at the 0.876 fib, and same thing, it burst right through it. And the pair now, we're just going to watch that level right here, right 95.30, for any pullbacks where they could see a little bit of resistance, support there. But the next logical target on this pair is the 100 level, and it could just continue to move up, but it will need a pullback just to get a little bit of steam over the short term. And I guess we can look at all the yen pairs, and basically they're all just going up. And that's the one thing to keep in mind. We want to watch resistance in the Great Britain pound USD at 145 here. If we get a breakdown below that, we could get a push down towards the 142.50 level over the short term. The CAD JPY continues to move higher. This pair was as of interest this week. We spoke about it sitting the same time at the 91.50 level. Now that the pair has broken above 91.50, it could be on a target for a push towards that same level at the 96.36 level from the big move higher lower in the fibs. All right, a lot of information there all thrown out at you. Basically, we're just heading into the week. We're going to watch the price action. There's no we could see a little bit of consolidation on Friday, which I would almost expect that. And the yen pairs are due for a pullback, but I've been saying that now forever. And don't fight the trend. Take what the pairs are giving you at this moment, and the path of least resistance is most definitely higher. And the most interesting setups heading into the new week are the most interesting setups are in the CAD sitting right here at this resistance, the bull bear line that we spoke about. And you can see we're going to watch the bottom here, the Great Britain pound USD. And most importantly, though, the one we keep an eye on is New Zealand right at the top of the range at 85. All right, everybody, good luck trading. Enjoy the Super Bowl and enjoy the rest of your weekend.